squeeze that up a little bit here. All right, so first question for you guys. Did everybody get an opportunity to run the update to the software yesterday? And if you haven't done it yet, you can do so from the resources page on the website. All right. Yeah, I think maybe there's a template. You need to change the time template on that. So maybe the time template didn't go 24/7, so it's only day session only. So if that's the case, then you need to just make a little adjustment on that. When you say that, Lance, let me see a picture of what you're talking about. I'll just turn on my TF. And again, I want everybody to keep in mind that these stop levels that we have come up with and the filters, you know, I just did I hate to use the word, just an initial setting, right? Because, you know, by the end of the weekend, we'll be able to have hopefully strategy stuff done to where we can do some hard numbers testing with all this. Of course, you know, we've already done a lot of work with these signals and settings and things of that nature. So, all right, so Lance, when you say it's wonky, what do you mean by wonky? It looks like it's working correctly based on settings that you have. So let's go through the trailing stop stuff here real quick, and let's just kind of talk about it so that way you understand it a little bit more. And I do very much know that I owe you guys some explanation videos that are a little bit more in depth on talking about each of the different components. Lance, the first thing when I look at this, how many dollars does the thing have to be up before it actually trails? So let's take a look at, I'll just look at it on my side here. So let's take a look at the stop and let's talk about some of the mechanics of it so you understand it, okay? And yes, I know I owe you guys a video. My voice has been so bad. I didn't want to make such a rough sounding video, so I'm trying to get that voice smoothed out a little bit. But let's talk about the stops. And well, here's what we're looking at, Lance. So initially, okay, you're going to have a fixed dollar stop. Okay, so when we look at your picture, I'm going to put these two side by side so we can see them, okay? Try to anyway here. Bear with me 2 seconds. My name is... Alright. So when we look at your stop, you know, if you have it set this way, right, you have an initial fixed dollar stop. Okay, now, if you have your trailing stop set to true, right, which I'm assuming you will, then the trailing stop trigger is going to be key. Okay, so the trailing stop trigger is $50. Okay, and then it should, when you get this tail bar, it should trail down behind that pivot, assuming that you're up $50. I can't tell exactly by the number of ticks right here, but if it's only up $40, you know, and do you have this $50 setting? And you have to keep in mind, too, that if you have a $100 target, Okay, there's about 3 different mechanics that work. Okay, so it starts out as a fixed dollar stop, and then you have a trailing stop, but it will only trail if you reach X number of dollars in profit. So if you set that for $10, let's just say, it'll start trailing behind all the pivots behind the bars much, much quicker. So in this case, it'll just trail immediately, and it'll also trail 1 tick behind the pivots. So whenever you get big tails or you get pivots, it should trail. Now, also, when you have move stop at fixed target 1 or 2, that's when you're telling it at what point do you want it to trail really, really tightly, so if you get a reversal bar, it's going to get you out of a position. So Lance, if you just out of curiosity, set that trailing stop dollar trigger to 10 and see if that changes. So, there's a couple of back and forth mechanics. Number one, your fixed dollar target. And then if you say, don't move my stop at fixed target 1, that means it's going to generate a limit order at that price, right? So we're not moving the stop there, we're getting out. So it'll generate a limit order. If you say, move my stop at fixed target 2, then the second contract will trail very, very tightly behind that position. So, you could have that number, you could set it for whatever you want. So if you get up $50, it'll trail really, really tightly. Or, hey, maybe I want to wait for $150 before it trails tightly. So, I did and it didn't. Okay. Well, I'll have to look at that then. Maybe here's what we've done. And, some of the complexities of it, what we've done is we've taken the base of the strategy code and turned it into an indicator. And sometimes some of the behavior is not identical, so I'll chase that down in the next day or so and double check all that stuff. So in this case, you see this long trend trade that we see here on the Russell. Because we hit that first profit target of $100, which is where that yellow line is right there, now it's trailing basically reversal bar plus 1 tick or minus 1 tick. So you can see that got much tighter on the position. So what you're saying is it's fine on all the other charts, just not. What trade setup was that? A trend trade? All right. So, and I know I'll have to look at it because, again, each of these things has to be independent from one another. So, and I know my divergence stop didn't plot at all yesterday. So, got a couple of issues. I worked really hard to kind of squeeze this thing out a little bit quicker. So, I apologize for any shortcomings that it has. We'll get them straight. The management side of it on the strategy portion that we're working on is working perfect. The conversion to an indicator, because you can't assume a position. Right? You can, but it's just a little bit different. So I'll get it straight. So what are we looking at now with crude oil? Well, crude oil has broken support and pulled back to our mid-band. And when we look at the mid-band here, a couple things jump out to you. Our small triggers have come right up to this area. This is the definitive line in the sand, right? Because if we get above this spot, we're going higher. Now the challenge is, even breaking through and being in a downtrend, do you want to sell the market into Fibonacci support? All right, Lance, talk to you in a bit. And I appreciate you guys reporting back anything that you see that might be off base. Obviously, when you guys get in here and look at this, one of the things that I was terribly concerned about, which I don't think is really going to be a concern, is just the sheer number of inputs. It seems a little bit overwhelming at first in the T3 trade setups. But when you look at the section for filters on trend trades, filters on divergence trades, filters on fib retest trades, and filters on fib trades, they're all the same. So once you understand those, 5 filters, 6 filters, and what they do and why they do it, then it's very quick. So, just to kind of go through those really quick, and I think they're moderately self-explanatory, but again, just to kind of go through things. When we look at, and we'll just look at trend trades here. Okay, the filters that you can use are the close beyond the small trigger lines as a percentage of the bar. So if you don't want trade setups that close only, just a little bit above the bar, like this one that you see here, you can change that number. So let's just say I made it 50% of the bar has to close above the small trigger lines, which is excessive, but I'm going to do it anyway. You can see that trade's gone. Okay? So the rules were met for the trade, but because we said we need to have at least 50% of the bar close above the small triggers, the trade's gone. So if we set it for, hey, just give me the reversal bar, which is basically what 0 means, and we click apply, you can see the trade comes back. The same thing holds true with the rest of the filters for trend trades. So if we say distance to support or resistance is a filter, right? So, this is about 18 ticks to the filter, right? So if I said, hey, I need to have 25 ticks to support or resistance, we're going to expect that trade to go away because we didn't have $250 per contract room. So when you guys are saying, all right, how much room do I need in order to have a trade that I can get into and manage if I'm getting close to an area? Does that make sense? So, and I have it set just as a default for 5 ticks. Okay, now the other side of it is, how much distance do I need to the farthest synthetic trigger? Well, when we look at the trade, you can see that we're actually above our synthetic triggers, which, as you guys know, is very much advantageous for long trades, right? So if everything's on the correct side, then this filter is not even going to come into play. The only time this filter will come into play is if you're on the wrong side of your synthetic triggers. Does that make sense? Now the same thing holds true for the distance to our, and I said slow synthetic trigger here because I want you to keep in mind what a slow synthetic trigger is. So when you have, let's just say, I'm going to draw a box in here. So we have a low. There's 2 synthetic trigger lines, right? There's the fast one, which is down below, and then the slow one. Let me just write this out. Okay, so when I wrote this code, what I said is, let's look at the distance to the slow synthetic trigger. The fast one is the first one you're going to get to, and the slow one is the second. I did this with the purpose of, if the trigger lines are already crossed up and you're below them, it's going to look at the bottom side of it. If they're crossed down, then you're going to look at the top side of it. And you can see we should see some type of long trade here if we actually get that. All right, so when we're looking at inputs again, to kind of go through filters here, and I promise you guys, If my voice stays pretty smooth, I'll make a video of this stuff today. So that way, I know it doesn't sound good. I'm trying. All right, so just getting back to the filters and just kind of giving some basic rundown on this stuff. All right, so distance to the synthetic triggers, I think everybody pretty much understands that, right? Distance to the slow or the trailing synthetic trigger number 2, and this one's going to come in, if we set it to 5, then that means, either you're going to be inside of them with at least 5 ticks to the other side, or if we set it for, a larger number, let's just say 10, right, then it means that you're probably going to have to be on the correct side of those synthetic triggers. So, if we set both of these numbers pretty large, let's just say 15 for an example. Okay, you're never going to get a trend trade 15 ticks below all of your synthetic triggers. It's just not going to happen, right? The rules won't allow it. So what this means is that you're forcing all of your trend trades to be on the correct side of both sets of synthetic triggers, which would make them more conservative, right? Then when, we're in a downtrend, let's say, and you're going to get a trend trade long. Okay. If the market is downtrending, you guys know that this 165 exponential moving average is a pretty good resistance line. So we have the ability to filter on our trend trades. How much room do we need to have to get to that? So we could even go so far as to say 10 ticks to that. So now we've got plenty of, we're going to be on, let's just say we need to have at least 10 ticks distance to a fib. We need to basically be on the correct side of both of our synthetic triggers for a trend trade. We need to have at least 10 ticks to a 165 EMA. And then the mid-band filter is probably not going to come into play because that's the area that we're generating our trades from, right? So when we put together all that criteria, we end up with a trend trade on the correct side of both of our synthetic triggers with enough room to reach Fibonacci and 165 EMA targets. Does that make sense to everybody? Did you guys understand that? So, that's really kind of putting together a more conservative trend trade. So as we go back and just look through history on the trend trades, let's take a look at them. Is this a trend trade that had the potential to make a little money? And you can go so far as to, if you're only testing one trade, go into the software and turn off all the other trades except for trend trades. So that way you can see exactly where just those trend trades happen, which I'm going to do now. All right, so, when we look at the trend trades themselves, so here's 2 of them, both of them on the correct side, right? And both of them have a little bit of potential. And, here's the third one. Obviously, everything's on the correct side with enough room. So, as you're going back and testing through the software, understanding the mechanics of the filters, and look, it kept you out of all this mess. Let's go back and find where the last trade was. And sparse, right? So here was the last trade. Granted, it barely met kind of the 10 tick rule, it looks like, but it went 11 ticks. So you can see, again, pretty conservative trend trade setup. All right, again, another trend trade that barely met the 10 tick requirements, but again, worked out. All right, so now let's go back and look at this trend trade. What do you guys think? Right side of everything, everything had a lot of potential. All right, so let's go back and look at this trend trade. What do you think? On the right side of everything had some potential. And then obviously this one looks ugly, right? Got to have a couple of those in there or else they're going to come knocking on our door. All right, again, trend trade on the correct side of all of our synthetic triggers and everything coming together. You guys see how that works? All right, so we go back again, trend trade, again with potential, right? On the correct side of everything with the potential. Going back even further, here's a trend trade that, and you look at this trend trade and you ask yourself the question, did that close enough above my trigger lines? Remember, we had that setting set to 0. Would it be more advantageous to force our trend trades to close 20% above the small trigger lines? That'll eliminate kind of the loose looking trend trades. So if I applied that, you see that trend trade's no longer there. So what this upgrade is going to allow you guys to do is really a couple things. But now let's go back and look and see how many of our other trend trades do we eliminate with that 20% rule. Remember I drew those circles on? Well, that trend trade, which was great, is now eliminated because you can see the percentage of the bar that closed below. And, usually when you're on the right side of everything, that's probably not going to be as detrimental. So let's see how many other trades we lost. Well, we lost another good one. We got that good one. And we missed this really nice one to the downside. So, in the trend trade, it doesn't look like it's more advantageous to force it to close above or below the trigger lines. Right? So just the reversal bar, because, there's two pieces to the puzzle that are in play here. We're forcing it to have plenty of room to all of our areas and nothing in the way. And we're forcing it to be on the right side of everything. So it means that the entry percentage on that trigger, not quite as important, is it? Just a quick visual back test. Does that make sense, guys? So as you guys are testing out different trade setups, so let's go in and let's just take a look at we'll turn off the trend trade and we'll do the fib retest trade. Okay, now when we get into the fib retest trade, there's not a lot of entry criteria, right? It's just filters. So we can go through and we can say, well, let's also have 10 ticks, room, right? Now, what I want to do is we'll do it with 0 filters first. That way we can see all of them, okay? Probably a good way to start. So we'll just go 0 filters. And we're going to find fib retest trades. Well, we'll go to the end here and see what we end up with. All right, so here's our first fib retest trade. And you guys know that's our stationary trade that we talked about. Of course, now it's automated. But you can see the rules in place. So breaking through Fibonacci resistance, right? Pulling back to mid-bands and support, we get a fib retest trade. I just want to make sure you guys can hear me okay. All right. So I want you to think about the rules for the fib retest trade. Okay, so if, I'm just going to throw an if in there at you guys. So remember, when you break down the mechanics of the fib retest trade, right? What's happening most of the time when we get this trade set up? Well, we're breaking through Fibonacci resistance, and the synthetic triggers are also breaking through resistance many times, and then we pull back to support. So here's the question I'm going to throw out to you guys. Okay, so if we filtered the close of the signal bar to the far synthetic trigger, which is right here, I want you to think about just the logic behind that filter. If we set that filter to 10, all right, so bear with me here. All right, so fib retest trade, and we set that filter to the far synthetic triggers to 10, that trade's going to go away, isn't it? Right? Now the question you have, and there's going to be a multi-tiered effect for you guys being able to work through playing around this. Yes, I am going to run some hard automated strategy numbers and say these are very, very good stable settings and here's some results. I expect to have that done by the end of the weekend. Okay, so for those of you guys who are going, man, I don't want to do all this work, that's fine. We're going to do it for you, just so you know, and we'll have some general guidelines and basic settings. But for those of you guys that are working through and really want to understand the rules and the plan and everything else, does this filter set to 10 make sense? Because that's really what we're looking for, right? We want to see those synthetic triggers breaking through the area because that means it's usually going to keep going to the next fib. So a filter of 10 on that one probably doesn't make any sense. Now, if we set a filter for 10 ticks on our second synthetic triggers, that's going to force us to either be above them or have at least enough room to get back to them. So that trade makes sense, right? And also, if you wanted to have trades on the correct side of the 165 EMA for these fib retests, then you can also set that to 10. And then, do we have room to the midband? We could just set that to 5. So just some kind of common sense things. So once you understand each of the filters and what they're looking for, they're the same on every trade. But because of the rules of the trade and the structure of the trade themselves, you don't necessarily want to have all the filters set the same. And that's why I took the time over the weekend to split out each of the trades so you could be very specific on what you're looking for and really give you guys the most powerful, tool available. So, don't thank me yet. I mean, obviously that means you guys have some work to do, right? In doing your own testing. And, some of you guys do not like fib trades. Some of you guys just can't stand the buying or selling at support or resistance. And, you like the trend trades better. That's okay. It's going to give you the opportunity to kind of fine tune what you want. So, let's just look at the Russell again while we're at it, and we'll look at fib trades. All right, so fib trades, and we'll just kind of talk about some of the inputs, right? So small triggers to the fib reset. Basically what we're saying is, where are the small triggers relative to our Fibonacci support? Okay, and if they're not 3 ticks past it, then that's good. We also are talking about the synthetic triggers, right? So where are synthetic triggers relative to our Fibonacci support and resistance? We also don't want those to exceed them by more than 1 tick. Okay, and then when we go into the input fib trade bars above or below synthetic triggers, if you require an exit look before you take a fib trade, then you'd set that number to at least 1. Okay, if you just say, hey, let me see them all, you just set it to 0. Now, you can also see support and resistance filter here, saying we want to have at least 10 ticks on a fib trade to get to the next fib trade. And then I turned off the distance to the synthetic triggers, which, if you only want to see them that are on the right side or far away, you can set a larger number there. So I'll leave it at 0 for now. And then if you want to also see, and if you look at this area, I know this wasn't a fib trade, but if your filter to the mid-band or your filter to your small synthetic triggers was set to anything, it would have stopped the trade from happening right there. So again, I just want you guys, all these distance to filters are the same on each of the trades. So once you understand one of them, you understand it. Then you have to understand the rules to the trade and what is actually going to create the trade setup itself. So you understand the type of trade that we're looking at. And once you understand the rules for the trades and you understand the requirements that you're going to need to have in order for it to generate a signal, we've accomplished something kind of sneaky in the background, which is now you have a trading plan, right? It's really an electronic trading plan saying that I need to have X, Y, and Z become true before I'll see a signal. And then, granted, I've got a little bit of work to do on the money management side of it. You can also work on your plan, right? And say, okay, I'm going to trade 1 contract or 2 contracts. Here's when I'm going to move my stops. Here's how much I'm going to max risk. Here's where I'm going to start trailing my stops. Here's where I'm going to get out with divergence. Here's where I'm going to get out at Fibonacci if it's closer. So or if I have a trend change against me. So, we're really working out the rules for not only the entries and the filters, but the money management side of it as well. So as you guys play with this, if you have questions, and again, keep in mind, this is nothing new. I spent some time yesterday talking about trade setups, and I forgot who asked me. I just forgot who it was. Usually I don't forget, but we went back to 2005 and we looked at trading rules from 2005, which I love to do. Because 10 years ago, there were 2 main trades in what we did, and I'll just show you the PDF again just for fun. Those of you guys that are brand new, this is our trade from 2005 on the Russell, which used to be the ER2. But you can see it's for counter trend type trading, or you're going to